I'd love to hear who your borrowers and lenders are at the moment in more detail. And then if you could also speak a bit about the senior and junior tranches that you have.
Yeah. So the borrowers are a mix of both fintechs that I was mentioning before, places like a PayJoy, but then also credit funds. So private credit funds are really interested in using Goldfinch as well because they can also raise capital faster. They're still lending to these fintechs that I was discussing. So it's pretty much all that, pretty much all these fintech lenders. But sometimes they kind of go through this channel of a credit fund. And that has a lot of advantages because the credit fund is talking with tons of these potential deals all the time. So they professionally do, underwriting and sourcing and origination. They know how to structure the deals legally, and they can basically take that deal, bring it to the Goldfinch community, sort of syndicate it out to all the individuals who are looking for their own yield. And so that's really like a scale. That's like a channel for Goldfinch. And we're working with dozens of credit funds right now. Each one of them wants to do 50 to 100 million with the protocol, over the next year. There's just a huge amount of demand around the world because of this. There really is a massive structural access gap for funding in developing markets, and a lot of that is there for interesting reasons. There's high interest government bonds that tends to crowd out investment from local banks. There's also just not as much money in these different markets, and so there's a gap that Goldfinch is really serving here, which is if you wanted to raise less than like 500K, maybe you can do that in these local capital markets, and that's okay. If you want to raise more than like 25 million, 30 million, then maybe you can start getting the attention of Western institutions. But there's a big gap in the middle where people have to pay this access premium. It's not a risk premium. These are high quality businesses, but they said there's just not as much money for these structural reasons, and so they want to tap into DeFi to help serve their needs and grow their businesses.
And how does the loan approval process work?
Fundamentally, this is a decentralized process where it said the borrower will bring this loan, and they show information, things like financial track record and history and who the team is and all that, to the community of backers that Goldfinch has built up. And so those backers are there to assess the loans. They do it individually, and they prove that they think this is a good loan by putting their own money up front. And so this is a really important thing to understand about how Goldfinch works. So there's two tranches. So there's backers, who I was just discussing, and also LPs. Backers, as I said, they're more actively assess the loans. They put their money where their mouth is by putting their money into the deal, and they are first loss. So they take a higher risk here. And if the borrower doesn't repay, then the backer will lose all of their money before the LPs lose any of their money. But in exchange, the backers are the ones who have to do this work, right? They have to look at that deal. They have to be willing to take the extra risk, and through doing that, the senior pool, which is what the LPs put money into, can then automatically allocate capital to the different deals that are going onto Goldfinch according to how many backers and how much money is put into a given deal. So this senior pool, by doing this automatic allocation, the LPs get this nice service of automatically allocating their money to high quality deals that people have proven is good through what we call trust through consensus. So, as we see consensus in a deal from the backer side, that's what gives the senior pool trust to put in additional capital. And so this is like a leverage ratio. So, backers might put in 20% of a deal, and then the senior pool puts in 80%. That means the senior pool has a 20% buffer or protective zone of capital before they're going to lose any of their money. And in exchange for this service, the senior pool, 20% of its interest is reallocated to the backers. And so this gives actually the backers a really attractive rate of return to incentivize them to do this work of doing the assessment of the deal. So the backers can actually get, we have a deal that's on the protocol right now that is for, backers are going to get 17% fixed USDC yields. So that's really great, right? And that's before any token incentives or anything. That's just real honest to God yield coming from productive real world use cases in emerging markets around the world. And so that's what the backers do, and they get these really attractive rates of return. Whereas the senior pool gets a more variable rate of return. It's lower, but it's safer, and it's more diversified across many deals rather than the backers putting money into a particular deal. And so that's the kind of trade-off there. And so we allow different types of investors with different types of return yields to be able to access Goldfinch.